What's up guys? In this video, I will be briefly discussing revenge trading, how to move on from it, and how to overcome it. When we begin our career, if you're anything like me, I was a perfectionist. I had to find success the hard way. I experienced a lot of losses, especially in the first year. I'm grateful that I had experienced them because that is what taught me to be the best trader I can be today. If you want to learn more about revenge trading and how to overcome it, listen to this video. Revenge trading refers to the act of impulsive trades due to previous losses. This type of behavior can be absolutely detrimental to your trading account, leading to further losses and emotional distress. Number 1, take a break. When you experience a loss or losses, take a small break to calm down and get your head right. This will help you avoid making impulsive trades based on your emotions. It is important to note, however, that you do not take too long of a break. This is a big mistake that a lot of traders make, especially when they're first starting or even midway through their career. They may experience 1 week, 2 week, or even 3 weeks worth of losses, and then decide they need 3 to 6 months break. You have to remember, the market conditions changes regularly. If you're giving yourself 3 to 6 months break, you have to almost relearn the new market conditions. Then you're basically starting again from ground one. So it is important that you don't take too long off trading. This could potentially lead you to make further losses. Well, I've given myself a good 3 to 6 months break. Why am I still losing? Maybe I'm just a terrible trader. Maybe this isn't for me. Maybe I should move on. Maybe I should quit. No doubt these are all things that you thought of after taking such a long time off. But we know that's not the case. And you may not realize this, but the market is changing constantly, and we have to be adaptable and change with it. So if we have too much time in between without being exposed to the market and having skin in the game, we do have to relearn these new market conditions. So of course, take some time off, take a few days off, take a week off. By no means should you be taking 3 to 6 months off after only experiencing 1 to 3 weeks of losses. It doesn't make sense. Number 2, stick to your trading plan. By following a trading plan, you can minimize emotional decisions, which can lead to significant losses. Sticking to a trading plan also ensures your consistency, allowing objective analysis of one's performance and adjustments of strategies over time. Ultimately, sticking to a trading plan improves your overall market discipline. Number 3, avoid trading when you're overly emotional. Avoid trading when you're feeling stressed, overly anxious, even depressed. Emotions can cloud your judgment and lead to impulsive trades that are often driven by fear, anger, or greed. Emotional trading can cause a trader to completely deviate from their plan. It can also lead to a vicious cycle of revenge trading, where traders try to recover losses by making impulsive trades, only to then compound their losses and potentially get to the point of wiping their entire trading account. Number 4, do not trade with money you can't afford to lose. Only trade with money you can afford to lose. Sounds pretty simple, right? You would think so. But when you're in the middle of a trade and it is going against you, you are swimming in an entire sea of emotions, which completely wipes out the logical side of your brain. Of course, trading always carries a degree of risk, and traders should only invest funds that they can afford to lose. We have to almost pretend like we don't have the money. We have to trick our brains into believing the money is already lost. That will take away the emotional attachment. If you trade with too much risk, this can negatively impact your well-being on a day-to-day basis. You may feel extremely agitated throughout the day, which also forces you to not want to do anything, not want to be social, not want to talk to anybody, therefore severely mentally affecting you. Imagine doing this every day. Add those days up at the end of the year. We all know stress can naturally bring on severe medical and health issues. So when I say this is very dangerous to our well-being, this is exactly what I mean. Number 5, practice patience. Be patient and wait for the right trading opportunities to come to you. This will also help you avoid making impulsive trading decisions, either out of boredom or frustration. When there is no opportunities, it is probably best to walk away from your computer. Trading requires an immense amount of discipline. Having impatience can lead to an unnecessary amount of risks. By being patient, you can wait for market conditions to align with your trading plan. Enter trades at the right time and avoid making costly mistakes. Patience allows traders to remain calm and objective in the face of market volatility, helping them to stay focused. Number 6, seek support. Seek support from a trading mentor, a coach. This will help you stay accountable to your trading plan and avoid making impulse decisions based on emotions. Trading can be extremely isolating, and having a mentor, coach, or a small support group can provide an immense amount of value, as well as accountability. Traders who do seek support can benefit from the experience made by others, learning from the successes and failures of other traders that have already been through it. Basically a quick guide on how to become successful, to overstep all those obstacles that we had to learn the hard way. This is extremely valuable, and if you have access to these people, I would suggest taking it. Having support by a group of traders can help you stay feeling really motivated, especially in times where you feel like giving up. Revenge trading is a common pitfall made by all traders in their early career. So if you are currently going through this situation right now, don't feel too bad. We have all been there. It's the steps that you choose to make next which is what counts. I'm sure you've all heard of the famous quote by Albert Einstein: the definition of insanity is doing the same thing over and over again. If you're going through a spiral of losses and you keep making the same mistakes, don't think much is going to change. You're constantly in that negative feedback loop. And for you to break out of that cycle and move forward and overcome your struggles, something needs to change. If you're getting to 6 to 12 months and you're still consistently losing by making the same errors, that says more about you than your trading strategy. It's time to make a change. Take accountability, drop the ego, and ask for help. If you want trading to be a full-time career, you need to be okay to let your ego and your guard down. Some of the best traders I know still have mentors. We need to constantly be on top of it. Otherwise, we risk losing it all. And I don't just mean financially, emotionally, spiritually. We don't want to go down that dark road. It's a never-ending road, and it's going to impact your day-to-day life. This is why the success rate of trading is so low. It has nothing to do with your trading strategy and all to do with what is up here. We need to overcome these dark traumas that we have. Trading will pull everything out of you that has been negatively impacting your life for many, many years. What counts is to be aware of these things and learn how to use them to our advantage to move forward and succeed in trading. This will put you in a position to have to be vulnerable. If you're not vulnerable, it is going to be almost impossible to overcome these issues. I hope this video has added some value, and feel free to have a look around at my other videos that I have created. There will be many more to come, so stay tuned.